Let's kick some ice.
Hello everybody and welcome back to the channel, and today's video that is going to be a continuation of our solar series. This is going to be part 3 and we have some really interesting companies lined up that we are going to run over today. So let's take a look at them. The first one is Meyer, stock ticker MYBUF. The price as of today is only 0.41 and the market cap is around $1 billion. And as we can see from the return over the last year, this company has been struggling quite a bit compared to a lot of the other solar stocks which has skyrocketed over the last year, and the stock is as of today down with minus 9.49%. The next company has done a lot better. That is SMA Solar, stock ticker S92, which is a German manufacturer. The price is $71.57 a share and the market cap is around 2.5 billion. And finally, we have Xinyi Solar, stock ticker XNYIF. The price is around $2.2 and the market cap is $19 billion. So obviously significantly bigger than the two other companies. And these stocks have done extremely well over the last year, similar to a lot of the other solar stocks. It has gained more than 300%. So a really interesting video, and let's jump into the first numbers. First, we obviously want to understand if these companies are profitable. So if we look at the net income for the last 12 months, we can see that Xinyi Solar is doing extremely well with more than $373 million in profit. Meyer, on the other hand, struggling quite a bit. They have lost more than $70 million. And SMA Solar are doing a small profit of around $13.5 million. So nothing significant, and that is obviously also reflected in the net profit margin. We can see 30% for Xinyi Solar. That is something that we really like to see. This is a good indicator already for this company. You have Meyer, they are struggling a lot more, minus 23%, so obviously not a good first sign on the company. And finally, you have SMA Solar with 1%, which is respectable, but not really something that is giving excitement for the stock as of now. We can also take a look at the Beanish M-score, which is just a mathematical model that determines whether a company has manipulated its profit or not. We want this to be below minus 2.22, and as we can see for Xinyi and SMA Solar, it's looking fine. Similar on the Sloan ratio, it identifies if a substantial part of the earnings are non-cash accruals, and we are obviously not interested in this, so we want this number to be between minus 10% to 10%, and as we can see, all of the companies are living up to that, so no worries on this particular part. So again, we looked at the stock, we looked at the trend. Xinyi Solar for the past month or so is pulling down in a downtrend. Otherwise, for the last 12 months, it has actually been an uptrend, so this may be a good opportunity to buy them. We will try and look at that later in the video. Meyer has not done as well. It's trading a lot more sideways, and the same with SMA Solar, which over the last few months has also been trading sideways. So again, the downtrend part for Xinyi Solar is in the short term. From a little bit long-term perspective, they're obviously still in an uptrend. On the net income part, Xinyi Solar and SMA were positive. Meyer really negative with minus 70 million. That was not a good sign. And in the net profit margin, Xinyi Solar was doing a lot better than the two others, obviously. If we then go into the return metrics, we want to understand how high returns and cash flow margins is being generated. And if we take a look at the earnings yield, the return on assets, the return on equity, and the return on invested capital, what is clear from the overview is that Xinyi Solar is outperforming the two other stocks by a huge margin. Meyer, of course, very negative and performing the worst of the three stocks. No surprise given what we just saw on the net income part. And SMA Solar is having positive numbers, but they are not really anything to be really excited about as of now with them. On the free cash flow margin, none of them are positive, which is obviously a bit of a disappointment. We would like Xinyi Solar to get into have a positive free cash flow margin. Meyer expected minus 13.8% and minus 2.3% for SMA Solar, which is okay, but nothing fantastic. Next, we go into the balance sheet, and if we look at the current ratio, we want this to be above 1, and as we can see, green for all of them, so no worries there at all. On the cash ratio, we also want this to be above 1. None of them are living up to that. That is probably due to the nature of the industry that they're in the solar industry. They're investing a lot of money into growth. If we look at Meyer, they are probably the most interesting one. So you saw for the last 12 months, they had a negative of more than $70 million, and the total cash and short-term investments is only on $43 million. So this could be an indication that if Meyer has a very negative 2021, again, they may need to go and raise more equity in the market. So this is a small red flag, and it's something that you need to be aware about, obviously, because if they need to do so, it could mean that the share price will be diluted, and that will obviously mean that it's going to go down. So keep this in mind with them. With the two others, it's looking fine overall. We look at the total assets versus total liabilities and debt equity. It's green across the board, so quite good. The Element Set score, which is obviously a credit strength test that assesses the likelihood of bankruptcy. We want this to be above 1.8. And here, Xinyi Solar is good. We get a red flag on Meyer, which is no surprise given their negative result and given that they don't have a lot of cash at hand. So again, they are not in a huge, strong financial position like the two others. The Piotrowski score is another way to assess the company's financial position and the strength, and we want this to be equal above 5, and here all of them are actually living up to it, so that's quite okay. But we would say the one to note is obviously Meyer, which is not in a fantastic financial position. The two others are looking really well, nothing to be worried about with them at all. So if we go back to the overall overview, we look at the return on invested capital and the free cash flow margin, and in both cases, Xinyi Solar is considerably outperforming the others, SMA the second and Meyer performing the worst. On the balance sheet, the total ratio, it was good for all companies, the same with the debt equity ratio, where SMA was doing the best, followed by Meyer and Xinyi Solar. But please be aware of the cash position of Meyer overall compared to the loss that they are having, at least over the last year. If this persists, this stock could be a little bit in a risk. So keep this in mind with them. We are then looking at the shareholder yield, and we basically in general want to understand how much value is returned to shareholders through dividend and or buyback. We're not going to spend too much time on this. You can see the dividend yield, a small one for Xinyi Solar, while as we mentioned, Meyer they have issued more shares over the last year, and we could foresee that this will happen again in the coming years. We then go into the earnings per share and growth section, and basically we want to understand whether these companies are expected to grow in the future and whether they are expected to become profitable. And here we can first take a look at the price to sales ratio, which is just a ratio that gives an indication of how expensive the stock is compared to its sales. And what we can see is that Xinyi Solar is 15.3, which is a lot higher than Meyer and SMA Solar. So it basically means that from at least a revenue perspective, SMA Solar and Meyer appears to be cheaper than Xinyi Solar, but as we saw earlier in the video, Xinyi Solar is a lot more profitable than the others. They need a lot less revenue to actually generate a positive income, and that needs to be kept in mind as well. Then we can look at the earnings per share for the last 12 months, and we can see compared to the EPS forecast for 2022. So we see a small improvement in Xinyi Solar, which is obviously good. Meyer also expected to do positive, and actually we could foresee that if this holds true, but then maybe in 2023 or 2024 they will become positive on the EPS again. But it is also an indication that in the next 2 years Meyer is still going to have a negative income, and again we referring back to the cash position, which is not that strong. So if this holds true, it is a clear indicator that they may need to go to the market again. So you need to be aware of this fact. However, it is also interesting to see that they are in what appears to be in a turnaround case, and they want to go back to profitability. And of course, if they're successful in doing so, it will have a positive influence on the share price. Finally, we have SMA Solar, which is expected to do really well over the next few years. But the flip side to that is, as you can see down here, that the net profit growth for the last 12 months declined with more than 106%. So again, they're kind of like also similar to Meyer in a small turnaround case, at least from a profitability perspective. We can finally look at the revenue growth for the last 12 months. And again, good number for Xinyi Solar, plus 30%. Actually quite positive for Meyer with 23%. But the side note to that is that Meyer revenue for the past 10 years had actually been declining quite significantly, and then in the last year they had seen an increase again. So this needs to be kept in mind. They are only moving back to where they were just a few years ago. And finally, we have SMA Solar, which also grew with 30%, which was obviously good. On the net profit growth for the last 12 months, Xinyi Solar outperforming all the others, plus 79%. It's really strong number that this company is delivering, and we are quite excited about it from what we have seen so far. Okay, so we looked at the earnings per share growth forecast for the next 2 years, and what we can see is that SMA is expected to do the best. Meyer is also expected to move towards profitability, and Xinyi Solar is just improving on what is already appearing to be quite solid numbers. On the revenue growth and the net income growth, Xinyi Solar was doing fantastically. Meyer and SMA on the net income growth for the last 12 months was disappointing quite a bit, and both of them appears to be in kind of like small turnaround situations. Finally, we want to understand whether these companies are currently under or overvalued, and based on our estimated intrinsic value, which is based on different numbers and assumptions, we see an upside on Xinyi Solar from today's share price with 23%. Meyer we find them fairly valued at the moment, so we don't see a huge upside or downside with them. And SMA Solar, we actually see a 14% upside overall. We can also look at the beta ratio, which just shows the risk volatility in relation to the overall market. If it's above 1, it means it's more volatile than the general market. And as we can see across the board here, all 3 companies are more volatile than the general market. We can also look at some other indicators. One of them is the book value per share. Here we want this to be above 1 because it means that it is undervalued. If it's below 1, it is overvalued. And as we can see across the board, all of them from this angle is considered overvalued. We can also look at the relative strength index for the last 14 days. We want this to be below 30 because it means it's oversold and it therefore may go in an uptrend. If it's above 70, it's overbought territory, and that is an indication that it may do a pullback. As we can see here, all of them are in the 40 range, so no clear indication whether it will go in an up or a downtrend. So we cannot say anything definitive from this metric. Finally, we can look at the analyst recommendation, and again, we don't want to follow them blindly because they have their own perspective, but it's always good to do kind of like a comparison of what we are seeing versus what they are seeing. And if we look at the consensus price target, which is the middle ground of all estimates, some analysts will have higher price targets, some of them will have lower. They see an upside on 13.2% on Xinyi Solar, so a little bit less than us. They see a downside on 23.1% on Meyer, so again, we are not aligned with them. We see a more fair valued price with not a huge downside as of today on Meyer, and they see a downside on 19.6% on SMA Solar, where you can see we see an upside on 14%. So overall, based on the overall value assessment, what we are seeing as of today is that Xinyi Solar is definitely undervalued. Meyer is fairly valued with a little bit weight on the downside part. And for SMA, we see that they are undervalued, fair valued-ish, so not a huge upside, but neither a lot of downside with them, like the analysts at least are predicting. So what is the verdict on these stocks that we have just evaluated? Well, they're quite interesting stocks from a fundamental angle. If we take a look at Xinyi Solar, it is definitely undervalued from our perspective, and it has very strong, solid fundamentals. It is similar to some of the best and strongest stocks that we so far have covered within this sector. I mean, a 30% net profit margin, that's really significant. And for us, with the recent dip that has been in this stock, it is definitely a clear buy and hold for the long term. We wouldn't hesitate to jump into them already now. It may drop a bit further. Right now the markets are volatile, but with the numbers that this company is delivering, we definitely think it would be a solid pick for the long term. So definitely something that we are very interested in. Then we have Meyer. Fundamentals are weak after many poor years, and they have a weak cash position. However, 2020 gave a glimpse of optimism with the revenue increase. Can they succeed with a turnaround? The upside in this stock will be significant, but so are the risk. And it is a risky pick. We don't see a huge downside on it unless the numbers are just as poor this year as they were in the past years. But if they can just improve them slightly, getting a bit more towards profitability, we see actually a big upside in this stock. However, it is a risky pick for sure. Finally, we have SMA. They have decent fundamentals. However, their profitability is a bit of a concern to us. We don't see a lot of downside in them. We see a pretty big upside as well if their profitability can improve. So it's definitely something we are going to analyze in a bit more detail before taking a clear action as to whether, or decision as to whether we really would like this stock or not. But so far from the three of them, Xinyi Solar, clear pick for us. Meyer is the risky pick. It can definitely go wrong, but it can definitely also go really right. And then you have SMA, which is kind of like in the middle ground. We need to understand them a bit better before we will give a clear indication on them. This was all we had for today. Please keep in mind that we are not professional financial advisors, and this is only done for entertainment purposes. You need to do your own due diligence before you enter into a position in any stock. Please make sure you check more angles, because fundamentals is only one part of it. There's also other sides of the story. Besides that, there's not much more to say. Then please subscribe for the future. Please give us a like, it really helps with the algorithm, and please provide us a comment in the comment section. Otherwise than that, have a nice day and stay safe. Hasta la vista, baby.